just wanted to talk about the conditioning that happens on a daily basis with trading. And that what happen is if you're trading the USD, you're going to be looking at recent price action. So when I say recent, this is from August, okay? I think the majority of retail traders won't be looking perhaps back here, but they'll be focusing on this downtrend. And see we're clearly descending lower, and it's the conditioning over time that reinforces their bias. And this is what I was saying about the stubborn bulls, the stubborn USD bulls, because they're enjoying their profits. Those guys who were buying the dollar all the way down, and they've done quite well, and they're reluctant to think there's been a change. But of course, the way the FX market operates is always like a changing of the sentiment. There's like a flip-flop whipsaw of price action that you will see in the sentiment. So there's these dollar bulls, they're profiting quite nicely. The euro bulls are undergoing a lot of pressure, undergoing a lot of losses. And now what's happened now with the cross dollars, that these guys are looking at price action and they're sort of thinking, well, this is quite bearish. I think we should still be bearish, but why necessarily? Because you can see things are chopping, right? So this is what's happening with the sentiment. We see like this change of sentiment down here, and they'd start to sell. And this is the Euro USD traders, and they'd sold it. They sold it in a big way here, and then we crossed the 50% line, and then we crossed the 50% line again, and now we're strongly into buy territory. So basically it's just a condition price action, and the dollar bulls made a lot of profits here, the euro bulls made a lot of losses, and then of course things have switched, and that's the key. The conditioning is going to remain in their mind because we're human, and we have like a perception of what we expect that's going to happen, and we're looking at price action, and those guys who are looking at this assume that it's going to continue, but it's not necessarily the case. And another thing, when you have like a range bound scenario, like maybe I'll draw a box, this is another thing that gets humans, that catches them off guard, is that if we have like a range bound scenario, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, I could probably argue 2 weeks of chop, and you think, well, might be contained within this chop. So when it does break out, it's normally quite sudden, and that's something that you might encounter. You think, well, I might place my stop here, or place my stop here, but then you get stopped out quite heavily. But if you've got the FXSI indicators, then you'll know prior, you know that we're going to have a break of the box due to the sentiment, and they really sold it. We had a big heads up of that move 3 days prior to that breakout because of this. Alright, so while we can have like some sideways chop, you might not be really sure which way it's going, but with the FXSI indicators, then you have a big heads up of the move before it actually happens, and it really went up to punish them. 280 pips from that move. It's not the greatest box by all means. We could have probably mapped that candle wick, but you get the idea, is that price compresses, and it helps you form a bias that we're actually range bound, and it entices you to place your stops at the tops and the bottoms, and of course it's going to want to raid your stops. And kind of frustratingly is that had you have like awful risk management, you might have been okay. So it's quite cruel, because it gets you trapped into a way of thinking that we're going to consolidate, but of course it consolidates to break out, and then it teaches you to have terrible risk management, and then you'll blow your account if you've got terrible risk management. So it's very tricky. So currently what we're seeing is that we're seeing a change of bias, because what's happened here, they're looking at price action, and we're probably going to have to come up higher in order to squeeze these guys out. And we saw like a squeeze here as well. And so that's just 2 tips there. So they've got the consolidation breakout, which we can have a heads up about the direction using the ratios, and then you target the stop loss cluster. And then secondly is that we can see like a conditioning that's going on, and it's like a muscle memory of recent memory, and they're just looking at price action, and they're going to hold on thinking that this is going to remain true, but it's not necessarily the case, because we can see how things they fluctuate in the foreign exchange market. It's not all one way, it's give and take. And so this is like a bit of a to and fro, and this is coming up because the herd, the dumb money, are convinced that we're still in this downtrend, but we can see we're not. We can see that we've actually broken this downtrend. See, just a simple technical analysis, and then you can just see we're actually starting a new trend, and we're going to have to come up to take stop loss clusters and liquidity. So we can have a look at those, and we know where to target. I can let that think about it for a bit. There we go. So there's your stop loss cluster, 109.72. You might be able to work out why they've got their stop loss cluster there. They might be looking at that high. Yeah, they might be looking at that area. They might not, to be fair, be looking at the daily time frame. They're probably looking at their hourly. It's quite common. And so that's just some tips there. So oh wow, that's quite brutal, isn't it? Yeah, they wouldn't be looking at the hourly. I think they're just hoping for the best, aren't they? They're just moving their stops higher, hoping that it's going to be okay. We have gone pretty skewed on our spreadsheet. We have to mention that we're 92% short. The MyFX book, very, very, very skewed. So we have to expect some kind of reaction because it's come up to punish them, and it's just a punishment box to punishment box. It just goes to take their stops, and it goes and rinses, repeats. So hopefully it was a good video, and there's a little bit of psychology there. We've got a little bit of chop, and it tries to ensnare you, and you know where to put your stop loss cluster, and then it goes up to raid your stops, and of course it does that horrible move to the downside afterwards. So it's very cruel, but you've got to be careful. Okay, and there's your target here, 109.70, which, you think about it, we've still got some stop loss cluster liquidity, quite a large size, so this is possibly still doable. We're only 25 pips away, so it's likely, but we are very skewed on our ratios as well. So my FX book will be very, very, very skewed down there, which is bonkers. Wow, it says 94% are short. There's only 6% are long, so this is coming up to really destroy the herd. So you've got to be careful, and a little bit of conditioning that we can see, and some stubbornness that persists in the human mind, and that's what happens with the price action there. So a little bit of tips there. Be careful today, and I'll be back later. I wholeheartedly recommend fxsi.com and their indicators for MetaTrader 4 and 5. It's a 7-day free trial, so do have a look. There's no credit card required. You might be lacking in some sentiment awareness, analysis, and it does complement technical and fundamentals very well. Especially if you're very technical, you could be missing out on some sentiment, or if you're particularly fundamental, you could be missing out on some sentiment. This is like a sweet zone. It complements both, and it gives you a very strong bias about direction as well. So technicals are great for direction, fundamentals are great for direction, but the sentiment sits in between. Okay, and so perhaps if you're missing out on some sentiment awareness, these are the best indicators in existence in the world for that. And then you can have a look at this. You've got a 7-day free trial, and you've got your order book, and you've got your indicators, including the ratios, which are amazing. Just look at my videos on my YouTube channel, and you can see how powerful the ratios are. And you can have a look. Just take your time. You've got 7 days to trial them, and if you don't like them, then that's fair enough. You don't have to renew, but we do have a code if you want to, and it's just the QuasiDB code, and it gives you a 10% discount, and that's it. So have a look, see what you think, and like I said, it's a 7-day trial, so you don't have to renew, but I think you'll probably find you will renew afterwards, because the order book and the ratios and the stop loss clusters as well are amazing. The stop loss clusters are great because you know where to target. Okay, that's where you take profit, where people get stopped out. Okay, and that's it. So just a quick plug for the fxsi.com, and enjoy your day.